Welcome to 2-Minute Analysis. Our goal is to not only entertain, but provide value and insights about the investments you care about. Today's episode is from this request. So let's throw 2 minutes on the clock and dive in. Today, we are looking at Visa Incorporated, ticker symbol V. Kicking things off with the quant rating system, it is currently a hold rating on the stock, and we'll dive into the metrics here in just a moment. Seeking Alpha analysts are currently a buy in aggregate on the stock, and that's 17 analysts in the last 30 days providing coverage. Lastly, Wall Street is currently a buy rating on the stock, and that's from 40 analysts in the last 90 days sharing coverage there as well. To learn more about how the Seeking Alpha quant system and Seeking Alpha analysts outperform the market, visit the link in the description of this video. So let's dive deeper. This is a $640.15 billion market capitalization company found in the financial sector and the transaction and payment processing services industry. Diving into the metrics, valuation grade is currently F, and if we look at the price to sales of 16.22 compared to the sector at 3.09, it's severely overvalued, but looking at the 5-year average of 17.31, it's pretty much in line. Jumping over to the price to cash flow, 22.27 compared to the sector at 13.49, again showcasing that this stock is currently overvalued. And lastly, looking at the PEG non-GAAP forward ratio, 2.03 compared to the sector at 1.09, something investors should keep an eye on. However, investors okay with paying up for this company because of the growth and the network effect here. Growth grade currently is a B-, year-over-year revenue growth of 11.34% compared to the sector at 8.43%. And the operating cash flow growth year over year is 15.58% compared to the sector at 7.79%. Profitability grade currently an A+, gross profit margin of 97.77% compared to the sector at 60.7% is a 61% difference and amazing to see. And then the leverage free cash flow margin of 50.18 severely dwarfs the sector at 16.93%. Jumping over to Momentum's currently a C- grade, 1-year price performance of 6.27%, beating the sector at negative 4.42%. However, more recently, the last 6 months and even the last 3 months, it's currently down compared to the sector that is showing some strength. Lastly, revisions grade is a D+. That's 10 upward revisions and 21 down revisions for EPS over the last 3 months, and 25 up revisions and 8 down revisions for revenue over the last 3 months. Now, this stock does have a small dividend, forward yield of 80 basis points, with a 5-year growth rate of 14.87% and the growth of 17 years. So as we look at the dividend grades, A for safety, A+ for growth, F for yield, and B+ for consistency. And if we jump into the yield here, you'll see 80 basis points compared to the sector at 2.98% on their yield, showcasing more that investors care about the profits of this company going into share buybacks than mainly that dividend yield. Now, that's going to wrap it up for this episode. If you have a ticker you want us to cover, add it to the comments section below. And don't forget to follow Seeking Alpha and even follow a Visa here on Seeking Alpha so you get notified when the next 2-minute analysis gets published and to receive free breaking news about Visa directly to your inbox.
Past performance is no guarantee of future results. Content provided for informational purposes only. Seeking Alpha does not offer any personalized investment advice and is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.